So the Federal Reserve cut interest rates yesterday by 0.5%. And if you don't know this by now, I'd like to welcome you back to Earth. So what does this mean, the rate cut of 0.5%? Well, first off, it's important to point out once again that this was the federal funds rate. This is the overnight rate that the Fed charges banks. So this really controls more short-term rates. Now, a lot of people are wondering, well, why didn't mortgage interest rates go down by 0.5%? Well, they're not directly tied to the federal funds rate. But remember, I've said this before, but it bears repeating, that the anticipation of a Fed rate cut, which has been in the works for quite some time, the market has already reacted to that. So in other words, mortgage rates were anticipating this for quite some time and already have come down. So I want to put things in perspective because I don't think people understand that mortgage rates have come down already. Let's go back in time, October of last year, 2023. Mortgage rates hit 8%. This was a big deal at that time, right? It kind of put the brakes on certain things. You're panicking a little bit. Are we going to go higher? Is this out of control? Hit about 8%. Since then time, in less than 1 year, not 11 months, right? We are now down to the low sixes, hovering just above 6% right now. So that's almost a 2% drop in less than a year. Let's just go back 4 months ago to early part of May. We were around the mid sevens, 7.5%, and now we're in the low sixes. That's a significant drop. So when people are asking when are rates going to go down, when are rates going down, ladies and gentlemen, rates have come down. Now, will they continue? Hopefully the next meeting is not until November. It's after the election. And then they're going to have one final one in December. But some experts predict that they could cut another 0.5% to a full percent more. So we'll have to see. We have a couple jobs reports between now and then. We'll have to keep our eye on inflation because remember again, the Federal Reserve's job, they have what's called a dual mandate. They look at inflation and job creation. Those are their two main concerns. They don't care about healthcare. They don't care about different things that go on in the government, right? Their two concerns are the job market and inflation. So keep that in mind. But I want to go back to where interest rates are right now because I think a lot of home buyers don't realize the significant decline that's happened over the last 4 months and what does that mean to their pocketbook. So if we take a loan size between $500,000 and $750,000, let's just go in that range. If you have a loan size, or you're going to take on a loan size between $500,000 and $750,000, your monthly savings now compared to just 4 months ago is anywhere from around $450 a month to $650 a month. That is a significant amount of savings. That's, maybe a car payment for a lot of you. You might be like, great, but what does that mean price-wise? Well, that's like someone dropping their price about $75,000, in the home price to equate to that savings between that $450 and $650. So this is significant. I think we're in kind of a unique period right now for buyers because we've gotten rates to come down, right? You also have sellers right now that are more cooperative. They are doing price reductions. I see it every day. They're kicking in closing costs or giving seller contributions. I understand that affordability is a problem still. Don't get me wrong, but compared to the last 4 months, buyers definitely have a unique opportunity to get into a market where rates have come down in a short period of time, and we're seeing sellers be a lot more flexible with price and closing costs. So lastly, let's get into what does this rate cut mean other than mortgage rates? Anytime the Fed cuts the federal funds rate, there are some items that have a direct impact. So the biggest one is equity lines. So those of you that have a HELOC, and I know a lot of people have taken out HELOCs with all the equity that they have in their property to do home renovations and whatnot, you immediately are going to get this same 0.5% reduction. So most HELOCs are tied to the prime rate, and the prime rate was sitting at 8.5% prior to yesterday. That's now going to go down to 8%. So if you're at, prime, or some people are even at prime minus half, you could now literally be under 8. You should be at 7.5%. So this was a big deal for HELOCs. Car loans is another one. You're going to see car loans rates come down as well. Should impact both new and used cars. Credit cards. Now, credit cards, you might not see as much of a decline, but there still should be a little decline with most credit card companies. But these short-term type of loans, you're going to see some impact. So this is great for the consumer. This was a step in the right direction. The Fed still got a little more work to do, but just remember, they're going to be keeping their eye on the jobs report and inflation. That's their dual mandate. Hope you found this helpful. Hope you have a great day.